Hello and welcome to another Smaulgld live stream. It is Sunday the 8th of September 2019 and it is Sunday night solid gold Sunday with Smaulgld Sunday night. And tonight we've got lots of charts to go through and a lot of gold news. We're going to start off with what's happening in India. Last night we talked about how Indian silver imports were soaring while gold imports were plummeting. We'll get into more specifics on what's happening in the Indian gold market. We've also got some charts on gold and foreign currencies. United States Mint and Perth Mint gold sales. Very, very low sales, especially in the United States. Possibly the lowest ever this year. Now go figure how that works out. We're going to take a look at the ETF stockpiles. And remember, a couple of weeks ago we did a story, where have all the gold buyers gone? At least we're talking about the physical gold buyers in the United States, or just people buying gold bullion as an investment in physical form. We are going to see that the ETF stockpiles are swelling. So if people are buying gold, if they consider that buying gold, they are indeed doing it in large amounts in these ETFs and these stockpiles that we're going to take a look at as well. So let's get into what is happening in our gold markets. All the charts that you're going to see tonight, as always, will be on Smaulgld.com shortly after the publication of this BitChute and YouTube. And you will see, I think tonight we might have 2 or 3 dozen charts. So if you missed some of them or you want to go back and take a look at them, you can go do that on Smaulgld.com. If you subscribe on the channel, Smaulgld.com, you will receive them by email as soon as they are produced. It's free. It's basically generally 1 email a day, depending on, I don't normally do more than 1 podcast or YouTube or BitChute in a given day. And I generally, if I do a podcast that has a separate title, and it will make a separate blog post and have those charts and tweets and other information and links on it. By the way, also this morning, I did a podcast on the Lightning Network. Please check that out. It's really for discussion as whether this Lightning Network, it's been around 3 years, whether it's even going to work and whether it even makes sense to try to turn Bitcoin into some transactional currency, which to date it really hasn't been. They're trying to make it so that you can use Bitcoin to buy coffee on some type of second layer software. Not sure that that's going to happen, but take a listen and let's have your thoughts on that as well if you're interested in the crypto space. All right, let's get into India. Now, we mentioned that Indian silver imports are up near record levels, the highest since 2015. Well, their gold imports in July are not at record low levels, but pretty low levels, and lowest since late 2016. And that I can attribute to the fact that we have had higher gold prices. The gold price has run far ahead of the silver price. Indians do buy gold regularly. They are opportunistic buyers because if you're in the gold market, like many Indians are, rural farmers, people in general in India buying gold, they know they're going to be buying gold lifelong. There's really no point in buying it and chasing it on the way up. They've seen this before. It goes up, it comes down. They tend to buy opportunistically. Remember, gold isn't something that you absolutely have to have, other than there's an expression in India, no gold, no wedding. But in general, you don't need to have gold on any particular day, especially if you may think you may need it for some type of financial emergency. Well, if you've been buying gold for years in India, you really don't need that last extra bangle or that last extra quarter ounce or tenth of an ounce, whatever you were going to buy, especially at this higher price. So that is leading to a decline in the gold imports into India. And the reason gold imports are important, for those of you who don't follow this channel all the time, we talk about that India really has no domestic gold mining production. And as such, they rely almost solely on imports. And the rest of the gold that they get that's not from imports is from the gold that they have within their borders. And some people say that Indians have 18,000, 22,000 tons of gold, and that would put it far ahead of even the supposed U.S. gold hoard of 8,133 tons. So Indian households estimated between 18,000 and 22,000. Some say that there's temples in India that may have a few thousand tons as well. So between India and China and possibly Germany, you might have 30-40% of the world's gold just within the borders of those three countries. All right, well, let's look at the current status of what's moving into India. And first we'll look at the annual, what's been going into India for the past 20 years. Pretty much an increasing amount of gold. You can see 20 years ago, 352 tons were brought in, and so far this year, 506 tons. 2000, 445, and you can see between 2000 and 2005, you really didn't break above 700, and then in 2005, they had 838 tons. Well, you do see a progression where starting in 2010, you had 5 years over 900 tons, and even 1 year over 1,000 tons. Interestingly enough, that biggest year was 2011, which was the high of the height of the price, at least up till then, in Indian rupees and also across the world. So it's possible that even Indians then, being the prudent buyers and price-sensitive buyers that they are, thought in 2011 it may get ahead of us. We may get a much higher gold price, and maybe they too fell into a little FOMO and started buying a bit more and importing more than they normally do. By 2013, however, India had instituted a 10% gold import duty. They've upped that recently. They've also added a 5% goods and services tax once the gold is in the country. They've tried a couple of schemes, one where they asked the citizens and the temples to turn in their gold and get some type of gold bond, and they would pay you interest to hold their gold. Now, the reason the government does, and not many people did it, some temples lent the government their gold. They're trying to untrap the wealth that's just stored away in India. It's a classic government thing. They want the velocity of money and so on. They don't want people to have a solid store of value that isn't under their control or ability to use it as part of the national treasure, so to speak. And they've also tried to make the Indians put the gold on a blockchain, not really a blockchain, but turn it in and get some type of digital certificate for it, and this way you can trade it. I'm not sure that these things are really taking off, but the government clearly is not fond of the fact that Indians have a lot of gold. Not only do they not like that they have it, the reason they don't really want them to import more of it is because it really screws up with the balance of trade. 10, 15, sometimes almost 20% of their imports are gold. And that's a staggering amount, and it does create a trade deficit. Now, looking at this chart, you say, well, we had a good year, or they had a good year, 2017 and 18, lots of gold going in like the prior years. 2016, you can see there's a 582 tons. That looks a little bit off compared to the years around it. And the rationale for that was, I think the Indians were back to their prudent selves. They saw, for most of 2016, during the Brexit run-up and Brexit, that was a mini gold peak. We saw gold get to 1375. We saw silver go higher. So it looks like they put the brakes on there. And then the price fell towards the end of 2016, fell during 2017 and 18. It looks like they picked up their buying. Now, this year, they're actually, through June, were ahead of last year's pace. Now, July was not a good month, and we had predicted that. We saw the price of gold rising. We didn't have the Indian import numbers. When we reported on the June numbers, we said, and we're not sure that there's going to be a big month coming again in July, and the rationale being that we know the price went up, and we know when Indians see higher prices on gold, they take a step back. Let's take a look at the monthly charts for India, and that's precisely what happened. I'm not taking credit for any prediction here because it's pretty obvious, but you can see there, June, there was about 65 tons brought in, but July, 37.8. Now that's pretty low, because just in May there was 116 tons, and then in April there was 96 tons. Even if you go back to February 2018, that was a low, 39 tons. It was still more than the 37.8. You go back to October of 2017. You have to go all the way back to August of 2016 to get a month that low, and that would be 26 tons. And again, August 2016, you could see that deficit, not the deficit, but the small vertical yellow lines in 2016. That is during the period of time when the price of gold was rising, and you can see it's very clear. That's where no gold was being bought, and then in the fall, a lot of the pent-up demand, the lower gold prices, you can see it went back to 86 and 110 tons. And then from then on, we've had fairly consistent, fairly high gold imports into India, except July. I don't know if it's an outlier because August might not have been any better. August might, again, I can predict, not with any certainty, but I can suspect that perhaps the gold imports into India were lower in August as well. This only goes through July. Now, India is important because we hear a lot of talk, about Russia and how much gold they're buying, the central bank. Let's just give you a comparison here of what actually gets imported into India versus what Russia adds to its central bank coffers. It's far more significant what India does than Russia. Russia is significant not as much for its gold buying, but more for its geopolitical significance. But in terms of just impacting the gold market, India is a much bigger player. And the reason for that also is not just the numbers you're looking at. You're looking at nearly 4 times the amount of gold imported into India than the amount of gold that the Russian central bank adds. But Russia gets that gold from its own mines. And they've been getting that gold from their own mines for years now in increasing amounts. So they're not impacting the international markets as much, other than to the extent they're withholding gold that might otherwise be exported, probably to China and India. But what India is doing is putting strains on physical gold demand, because when you buy 1,000 tons, 947 tons a year, that's a significant amount. That's a good thing. All right, so that's an indication of India's size of gold. I got another chart here. What does this one show? Well, that's pretty much the same chart, only in different colors. I'm not going to show you that one. I'll show it to you. I did make it so I can show it to you. There you go. That chart is same chart, only I did one with the Indian color green, and you can see that the Indian gold imports dwarf the Russian gold additions to their reserves. Now, India, keep in mind, those numbers were imports, and that gold is going to the people. Reserve Bank of India recently stepped up their gold purchases, and you can see they had not really added any gold from 2009 to 2018. Then they started adding at the end of 2018. In 2019, they added. Now they're up to 620 tons. So they added a couple of more since I made this chart. You can see 2008, they only had 357. That's because they sold a few hundred tons, I think in 2006 or 7 or a little earlier, and then they basically bought it back in 2009, but then didn't buy any. So again, it's important to keep track of the difference between, it's not hard to do, how much gold a reserve bank of a particular country has, i.e. the Reserve Bank of India, versus how much gold is in a country. But the gold pumpers will constantly try to confuse you and pump this whole story about China and Sun Tzu and do not tell people what you're doing and appear to be weak when you're strong, and then roll your gold out into a stadium. The People's Bank of China reports the amount of gold. It's under 2,000 tons. It's the 5th largest gold, or 6th largest after the Russian Federation central bank. And yeah, sure, there's other gold in the country. There's no big secret. There's no Sun Tzu deception going on. I've done charts showing, I've had articles published in Zero Hedge on this, that the gold that, quote, China has is, yes, because it's a communist country, most of it is state-owned. It's just not at the People's Bank of China. They're not obligated to report what they report. It's at other state-owned banks. It's at subsidiary banks of the People's Bank of China. It's at sovereign wealth funds. There's people who have it. It's on the Shanghai Gold Exchange being traded. Of course there's more gold in China. So the same Sun Tzu deception, you don't have that with India, people don't talk about. They're just somebody hasn't come up with some foolish meme or whatever they call it, pumper story, the Siddhartha way of buying. I don't know. They don't do it with India. I mean, you could make up the same story, how much gold there is in India, and India's lying. And now China's not lying. I mean, they could be. But the fact that the People's Bank of China reports a certain amount doesn't mean that China is lying. And that's the other problem with all these central bank numbers. Who knows if any of them have what they say they have? What's interesting is the gold pumpers will have you believe that China's lying, but you can believe the amounts that they say they have, and then say you got to double or triple or quadruple it. They insist on that, and they'll insist that the United States doesn't have any. How do these people know anything? They don't know. They tell you these stories. What's interesting is that not only do they tell you these stories, other people repeat them, and they think if they hear it enough and they repeat it enough that it must be true. I've done a whole video on whether there's gold at Fort Knox. I'm not going to talk about that tonight, but again, that's another silly story that they promote, just like JP Morgan buying Silver Eagles, COMEX default, gold back yuan. They're full of these stories, and I guess most of you, maybe not all of you listening to this channel, I know some of you are regulars and you know my theme on this, but most people who follow gold and silver love to hear these stories, love to hear them repeated, and get mad when anyone debunks them. Well, sorry. If you don't like the channel, you can go somewhere else. There's plenty of channels who will tell you there's going to be a gold back yuan, or China's going to crush the dollar, or end of dollar hegemony, and whatever. Okay, so Reserve Bank of India, decent amount of gold, but nowhere near the amount of gold that's in India. There's no Siddhartha deception going on here. There's no Gandhi, whatever. Okay, now other things on, just throwing out Indian references, because people that pump gold are always pumping some foolish Sun Tzu reference about what China is doing. China is basically, what they do is not, they're focusing, the focus of China is to centrally plan their economy and try to get it moving, not to buy gold. But the gold pumpers have you believe that the Chinese are smart in and of themselves. They sit around, they read Sun Tzu, they wake up in the morning, they go to the gold store and buy gold because they're smart and they understand gold. I've talked to people who've lived in China. That's not the top of their mind. Just like most people, they're not obsessed with single assets. There's not 2 billion people in China that are obsessed with gold. In fact, you're going to find more people probably obsessed with gold in India, but that's a different story. Well, let's take one last look at Indian gold premiums, and we're going to take a look at the price of gold in Indian rupees. There is a premium on gold in India. And that's because, for the most part, it is a physical market. You want gold, you go to the market, you want to buy it. It's going to have a markup on it. There's going to be a fabrication charge on it. There is a premium on gold in India. And according to Nick Laird here, there's about a 13% premium at the moment. But that's not out of whack, meaning compared to what it normally is. If you see the chart there in red, they've generally had a premium since 2012-13. That could partially be also because of the tariff that came in, the import tariff in 2013. But I attribute it to the fact that at the prices that are quoted on the LBMA and the COMEX, they may not be able to source the gold that they need because they have to get it either through imports, and if that doesn't work, they've got to extract it from existing people's hands in the, out of the 18,000 tons. And if you know, the reason Indians buy gold, it's not to trade. They may buy some silver and do a little trading there, but generally gold is to buy, and it sits in your family and it goes to the next family, or it goes into another family in the form of a gift, but it's not really to buy and then to sell to try to make 10%, 15%, short swing trades and so on. But let's take a look at the Indian, what they're facing and why these gold imports are down in terms of what the price is in the Indian rupee. So here is a short-term chart, and this chart shows that right now it costs you 107,000 rupees to get yourself an ounce of gold, and you go back a year or so ago and it was 86,000. It's a pretty steep increase, and you can see, look at that August to September increase. The July numbers weren't very good for Indian imports. And I think that's because of the June to July move up. But the July-August move up wasn't very big. And that's when in July they were reacting to the June-July move up, run up. They held off on buying in July because of what happened in June. You could see the run up there. But the run up from August to September was even bigger. So I would imagine September, this month's sales, might really take a hit. It might not be too bad in August because August was looking at July numbers that look like they pretty much stabilized during the month. So if we do have a decent month in August when those numbers come out next month, maybe September might be a very bad month for Indian gold imports. I don't think they have FOMO yet. I don't think they would be pouring in because the price went up. Take a look at a longer term. All these charts again on smaulgld.com. If they have a Smaulgld logo on them, you can do what you want with them. You can copy them. You can tweet them. You can put them on your Facebook, your blog post. Just say you got them from the Smaulgld website. Now, gold and Indian rupee long term. Look at that. This is the 20-year chart. And they used to pay 20,000 rupee for an ounce of gold. And now you pay 110,000. So you're looking at 4x. At least over 4x times the price. So you can see why it makes sense to buy gold in India. It really does. It doesn't make sense to hold on to rupees whatsoever. They're holding on to it anyway. They already have it in their minds. It's already cultural to have gold, and it's just confirmed when they see the price of the rupee and they see the value of the gold going higher. And again, if you would just save that money in a rupee bank account, you'd have gotten hammered compared to what you could have had if you held on to gold. So keep this chart in mind. Speaking of foreign currencies, let's take a look at some of the, let's start with Australian dollars. Went down a little bit, you can see recently, in the last couple of days of the trading week, last week, Thursday and Friday, we had a big hit in the gold and silver market, silver even more so. But gold and Australian dollars still near an all-time high, hit an all-time high just earlier in the week. But it's at 21.95. That is very high. You can see that chart there. And I'm just going to blow through these charts. You can look at them on the website, or you can, after this is over, you can pause the video and take a look at them. Let's look at Canadian dollars. Same thing. Had gotten above 2,000 Canadian dollars per ounce. It's down at 1982. In fact, the gold markets are open again. Let's take a look. I think they're down. Yep. The gold right now in U.S. dollars is at 15.05 and silver at 18.15. So we're no follow through on the downside, but a little bit of stabilization. I think they opened up a little lower than they are right now. Yeah, gold had dropped to 15.02 and now it's at 15.05. So not much movement yet on the price of gold and silver. There's your Canadian dollars. I think I pulled up euro. Here's your euro. The euro had reached over 1,400 euro versus gold. Gold now cost about 13.63. Again, up from 1,000 just a year ago. So it's like a 35% gain against the euro. Very big move there. Gold versus the British pound. Big move too. From about 900 British pounds to over 1,250, like 1,275. Right now it's at 1,224. And a lot of that has to do with weakness in the pound, but of course strength in gold versus all fiat currencies. And we'll take one final look at gold versus the yuan. Not the gold-backed yuan, but the regular good old printed by the trillions yuan, Chinese RMB or renminbi. Up to over 11,000 early in the week, dipped below that, but again in the last year, up from 8,200 all the way up to 10,700. So big move in gold, and of course, you really are not going to go wrong with gold against fiat currencies, including the dollar. Even the dollar, which is supposedly the strong safe haven, gold has been outperforming the dollar most years, and over the long term has outperformed the dollar. And it's clearly crushed all other fiat currencies. Can't say the same for silver, but gold definitely has been a safe bet. And just to show that off, let's take a look at the gold price over the last 10 years. So if you bought 10 years ago, you're up 50%. It's better than holding on to dollars. Now, you might have done better in the stock market. You might have done better in other assets. That's not the point. There's generally less worry in gold. It's not going to default. It's not going to go bankrupt. It's not going to do anything except react to the world. So that is why it's a defensive position, not a speculative one. Some people think it's a risk-on position. They will chase it for FOMO, but it's really not what gold is. And you can see there, though, you've done well over 10 years. Silver, last 10 years, you haven't. But that's a different story. We're looking at gold now. We also have the 1-year gold price. Here's your 1-year gold price. And now this year, you're up 27% versus a dollar, which is appreciating against all other currencies. So that is very, very significant. The dollar is getting stronger the last year. Trump doesn't like it. He wants a weaker dollar, but the dollar is getting stronger. And all the currencies are falling versus the dollar. In light of a stronger dollar, gold still is up 26% versus the dollar. Now, the reason I think that's a very good sign is we know that the dollar can't keep rising because either the Fed or Trump or both will do something to halt the increase in the dollar. They're probably not going to want to halt the increase in gold because actually a rising gold price, at least in the old days, used to help depreciate the dollar. That's why Roosevelt rose unilaterally. Well, he didn't do it. The Congress did it in 1934. He confiscated the gold at $20.67, and then 6 months later, the Congress revalued gold to $35, effectively devaluing the dollar. So that's when the two are very linked. Today, they're not as linked so much, but they're linked enough that if gold were to go higher, that would be a vote against the dollar. And it has been. I suppose the dollar, it's up this year versus all currency, but it is down significantly versus gold, 27%. And the gold-silver ratio, now silver, as we mentioned, is going to start to catch a bid. Here you go. It's still over 80, and it's been over 80. There's your 10-year chart, and you can see it's pretty much gone straight up over 10 years. Despite what all the pumper channels telling you, unsustainable, silver is so useful in our life, silver is rarer than gold, bankers this, JP Morgan that, all garbage. Silver is not a monetary metal. It's got a monetary component. It's very small. Gold still maintains a large part of its monetary component, especially in India and other countries and among traders. And silver is priced primarily on its commodity demand, which is pretty much flat for electronics. It's down over the last 10 years. It's not really, silver is so useful. They are finding more uses for it every day, but they're not finding uses for it that require extra billions of ounces of silver. And so the point is that silver rises if there is some type of commodity shock or shortage like we may have seen in palladium or rhodium or any of those types of more rare precious metals. That hasn't happened in silver. Or silver's dormant monetary component, dormant investment component gets lit on fire because gold is going higher. Those are the times when silver does well. And that could be happening now. That's my prediction for this year. If gold, and prediction for this year that I made at the end of last year, that if gold were to get to 1,500, stay above 1,500, look like it was in a sustained bull market, then I think silver would catch up and starting to do that. As you can see, the gold-silver ratio coming down. No one else has made that analysis. Everyone just tells you silver set to skyrocket. Who is this guy? He doesn't know what he's talking about. Okay. Been right more than I've been wrong, but I don't make predictions. I don't give investment advice. And that's the other thing. A lot of these channels, all they want to do is tell you how smart they are, and they want to tell you to do this or do that, and people listen to them, and then when they're wrong, they never meant they were wrong, and then they somehow convince their people who are listening to them to say, well, he's not wrong, he's just early, he's smart, this happened, manipulation. And I guess they've been mesmerized by BS, that when something is wrong, they refuse to see it as wrong because they've seen the same prediction on 20 other channels. They start to believe it becomes part of their DNA, and now they are convinced that even though they're all wrong, that somehow they're right, because they've heard it enough and they've repeated it enough. All right, now let's get into this is a tough one because we have diverging charts. We've got the American Gold Eagle, American Gold Buffalo, and Perth Mint sales, which are atrocious. You would think they'd at least, I mean, there's no reason for them to be this low all year. First of all, the price this year hasn't been skyrocketing all year. It was relatively low. It wasn't at a bottom, wasn't at a top. So you would think you'd get something normal. No. Then you would think, well, if the price was rising, that might ignite some interest in gold. Nope. No interest in gold at the U.S. Mint or at the Perth Mint, really. And yet, we're seeing big increases in the depositories. And we're going to take a look at that. I think we're going to look at the depositories first. That'll make the mint numbers look even more suspect. Not suspect. I don't disbelieve the numbers, but more incongruous. You say, what's going on here? And I can guess, but not quite sure what's going on. So let's look at the ETF numbers for gold. And they're going up. I mean, they track the price of gold almost to the note since 2013. You can see the black line. And the last, it looks like middle of 2019, the amount of gold going into ETFs is heading higher. It's clear on the chart there. The biggest ETF is SLV. That's the SPDR. That's the big yellow in the middle. You got Sprott on there. You got ETF securities. You got Deutsche Bank in red. And they're all going up pretty much. And to be expected. I mean, the price is rising. We've got negative interest rates. We've got a Chinese trade war going on with the United States. It's classic safe haven times. And these negative interest rates are showing that there is a big spread between inflation, which is the way they measure it, almost 2%. And then if there's no interest being paid globally on 30-40% of the bonds, you're going to get hosed. I mean, you buy a negative yielding bond. The only way that a negative yielding bond will ever pay off for you is if we have massive deflation and the deflation rate below the negative yielding bond. We don't have that right now. We have, some might say we have high single digit inflation, depending on how you measure it. But the way they measure it officially, it's close to 2%. The U.S. Treasuries are under 2%. Some of the other bonds that are considered grade A, investment grade, they are negative. So why would you put your money in there when you can put your money into gold? And it's not investment advice. It's just common sense. Gold's not going anywhere. They don't make any more of it. They do make more of it, but I mean, it's a relatively fixed supply. They can't inflate the supply just because they feel like it. And that's why the price is going up. Doesn't mean it's set to skyrocket, but it just means that more people should catch on to the fact that I can understand wanting to buy a bond over gold. I mean, I can get it. You want a return. Maybe gold doesn't give you a return. That's the cut against gold. Gold doesn't pay a return. Well, a negative yielding bond does worse than not pay a return. It doesn't give you jack at all. So I just can see how gold can continue to rise, and you can see why people are putting money into the gold ETFs. They're not stacking gold. They're not buying physical, but they do want what they call exposure to gold. Let's take a look now. We look at this for silver and gold every week. This is what Nick Laird pulls together. And it's basically all where the identifiable stockpiles in the world are. And one of the big ones are always in the COMEX warehouses. And then you got your ETFs. Then you got gold money. You got Central Fund of Canada. You've got Bullion Vault. You got the Canadian Mint. You got a bunch of places that'll store gold in various ways. We're not going to get into which ones will let you take delivery, which ones won't. But the point is, they all purport to store gold, and they all purport to add certain amounts each week that they have under lock and key as custodians. And we're seeing still GLD, iShares, IAU adding 4-5% extra gold every week, every 4 weeks in a month. That's a lot of gold being added to these funds. They have a lot of gold in them. There's the amount of gold and silver that they have in these ETFs is a staggering amount nowadays. These didn't exist before 2006, 2007. So the fact that all this gold is going in and continues to go in shows that precious metals are popular. But what's more, I suppose, disconcerting is that the form of holding gold has become more popular to hold it like what you're seeing here. And even things like gold money and ETFs, they're popular. They are convenient. There's no two ways about that. If you ever had to sell the GLD or try to sell physical holdings, one is a mouse click, the other is a process. It's got to move from one vault to the other vault, and you got to sign papers, and then it's got to arrive at the place. I mean, it's at the end of the day, you say to yourself, why would you do it that way? But in any event, this appears to be where the world is heading in terms of, at least in the Western world, of precious metals ownership, other than hardcore stackers. Now, you can see these numbers have gone up. But let's take a look now. I'll give you one more look at this depository stuff here. You can see gold held in by third party. So the advantage to third-party storage, we all know that you've got counterparty risk and so on. It's funny, Gold Money always talks about gold having no counterparty risk, and yet they ask you to send them your money so they can store the gold for you with counterparty risk. Not cutting on Gold Money, I'm just saying that it is an attractive proposal for many to have someone else hold your gold. If it's insured and it's under lock and key, you don't got to worry about it. And if you want to sell it, it's either a phone call or a couple of clicks on the mice, and it's done. So I can understand there's a attraction to that type of gold custody. Now you can see a lot of it's going in since the peak of 2012-13. It went down, and since 2016, it's gone up, and it's almost where it once was. But what's interesting is the massive increase. Look at that. In the amount of gold held in these custodial arrangements prior to 2002, it's pretty much no one did it. There might have been a rich person here or there who had like a private key and they can walk into a Swiss vault. But there weren't these arrangements for the masses where you could store gold at any of these types of places. All right, so there you go. Now let's take a look at those abysmal U.S. Mint and Perth Mint sales. So here is a general chart showing all American Gold Eagle sales, well, 1 ounce American Gold Eagle sales from 1986 to 2019. And you can see when they first came out, they were pretty popular. They sold 1.312 million. And you know why they were popular? Americans weren't allowed to own gold from 1933 to the end of 1974 when Gerald Ford allowed it, and when after executive order, I think it's 6102 by FDR, outlawed the private ownership of gold. So from 1974, that's when Gerald Ford said that Americans could hold gold again, but there were no American gold coins to buy. There was no bullion, and that came out in 1986, and there was clearly a market for it. You can see 1,312,000 were sold the next year, and then you can see by 1988, 88, 9, by 1991, people had just decided they're not interested anymore. They lost their interest, and you can see the sales were low. Now, going into Y2K, you can see that there was a big interest again, 1.5 million. Those are the big years. Going into Y2K, they were bigger years for gold sales at the U.S. Mint than 2009 and 2010 when we had the financial crisis. And part of that is because there was no other way to get exposure to gold in 1998, 1999. Remember, all those ETFs came online around 2006, 2007. And now you see what the point of this chart, though, is to show that unless, well, we should be able to beat the year 2000, but in 2019, this year, they have only sold 88,000 1-ounce American Gold Eagles. That is the lowest ever. Now, it's actually through September, right up to Friday. But if they were to shut down today, this would be the lowest year sales ever. And we can all understand 2000 because 1998, 1999, when people were stacking because they thought that the world was going to end because the lights weren't going to go on New Year's morning on the year 2000. The computers weren't going to work. Planes weren't going to go anywhere. Supply lines were going to freeze up and we would have no way of transacting. Your banks were going to close. So everyone was buying gold. That makes sense. And then in 2000, didn't happen. So people said, well, screw that. And there was an internet bubble booming at the time. So why would you bother buying gold? So I understand that year, 94,000, lowest ever. But this year is the lowest ever. Very, very low. And you say, well, maybe the U.S. Mint is not being forthcoming. I don't know about that. Perth Mint isn't very good either. And let's look how they break it down. That's American Gold Eagle sales, the 1 ounce coins. But I also made a chart. And again, I don't know how much longer I'm going to be making all these charts. They are time consuming. I do have 21 patrons. I do appreciate that. But we do need more patrons on Smaulgld. Ounces sold is a new chart. Ounces sold of American Gold Eagles of all sizes. So I added up the 1 ounce, quarter ounce, half ounce, and 10th ounce American Gold Eagles, and then added them to the 1 ounce American Gold Buffaloes and got the total number of ounces of gold sold. So 2019, when you add in the Buffaloes, which they didn't have in 2000, we're actually out of the danger zone, having the lowest amount of gold sold at the U.S. Mint, because in 2000 they sold 164.5 thousand ounces of gold in all forms, but they didn't have the gold buffalo. This year, if you add in the gold buffalo, I think they sold about 50,000 so far. We're safely above that number, so the U.S. Mint will not have a record low year, but they still might have a record low year of 1 ounce American Gold Eagles. Again, highly puzzling to have this low. I can see, yeah, maybe they're down a bit off of 2016, but this has been going on since 2017. You can see it went from 367 in 2018. It was like 4 something in 2017. Don't know what's going on. It's a very odd dynamic there indeed. All right, let's look at the Perth Mint, which is not much better. And the Perth Mint also sells to China, but the Chinese have other ways of buying gold other than the Perth Mint. But let's just take a look here. There it is. The same dynamic though with the Perth Mint. The Perth Mint is in red, and they were pretty much consistent 2014, 15, 16, 17, 18, over 400,000 every year except 2017. But this year, this is through August, 176,000. So it doesn't look like they're going to even get to 300,000 this year. So we've got a lot of low sales at the U.S. and Perth Mint in the physical side, and yet we've got booming demand at these depositories that we saw here. Gold Money, Central Fund, GLD, Bullion Vault, ETF Securities, IAU. Lots of gold flowing into those. Deutsche Bank, and so on. All right, I think that's it on the gold tonight. So let's see if you guys got any questions or comments, and then we will bid you good evening. Let's see what we have. I'll pull them out here. Okay, there's that. And I think we need to go to... Oh, I think it's at the 6th. You know what I'm looking for? I'm looking for the Smaulgld fundraising page. There you go. Well, it's up there, and you know what to do. You've got different ways of supporting Smaulgld. Also, if you're going to buy precious metals, and you're going to do through SD Bullion Money Metals Exchange or Golden Eagle Coins, please make sure you use the Smaulgld links. Do get a commission if you are going to buy through those sites anyway. You don't pay any more, any less. It's just that when you click on the links, there's a tracking number, and if a sale is made through this BitChute link or YouTube link, or if you go do it through the Smaulgld site, Smaulgld gets a small commission. That's another way of helping the site out without actually spending money that you weren't otherwise going to spend. If you want to spend extra, you can do so by donating through Bitcoin, Litecoin, PayPal, Patreon, Subscribe Store, or you can send checks or money orders. Who uses money orders anymore? But you can send checks or cash or items of value like gold or silver to Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820. Or you can purchase some mugs over at the Smaulgld site. So check them out and let's see what you guys are saying. All right, top chat. All right, Ken Stinga has finally made a live show, she says. Here we go. All right. The dogs are howling tonight. How big is the effect of the Indian gold market on the global market? Well, that's a nuanced question, Trey Snow. On the physical market, it's huge. I mean, you have to take into account how much gold has to be mined, how much gold has to be cast and sent into India, imported, the logistics, and so on. So India is important. Whether any of that impacts the price of gold around the world, I'm not sure. A lot of it's just based on trading. But okay, let's see. Is the international gold supply and demand affect the current price? I was told the price is completely manipulated by contracts. How is the gold price determined? Again, that's a very complicated question, but gold price is determined largely on the COMEX, somewhat on the Shanghai Gold Exchange, and somewhat on the LBMA. They all have different ways of trading, so to speak. The COMEX is probably the easiest one to manipulate because you can sell gold short, you can mess around with contracts, there's been spoofing going on. But the question is whether that actually is being done on a long-term basis or just for profit. But one thing it does do is, and it's designed to do, having a futures market in gold, is it does discourage people and it does discourage hoarding. And if fewer people hoard gold and they decide to buy their gold through this, quote, exposure, through these custodial agreements where you never see the gold, that could indeed make physical buying go down and therefore have a negative impact on the price because in a sense it reduces demand. I mean, if everybody in the world were like the Indians, where it was part of what they had to have and they had to buy it, then the gold price might go higher because the physical supply might start to get strained. But what they've done is, you can see in the West, if people aren't buying gold at the U.S. Mint and they're happy to buy an ETF, I mean, they claim that when people buy gold through the ETFs that somehow that gold magically appears in the vaults. I'm not so sure about this. Coins AZ says, hello to this guy, mug stacker and asset lovers. Fiona Williams, let's see. What happened in Australia the last week, says Avril Blackwig. Nothing in Australia happened. The same thing happened around the world. In the last 2 days, the gold price went down. Trey Snow, my wife won't let me go onto Patreon. She says it's full of hoes. All right. Well, then don't go to Patreon. If you want to donate, you can donate directly to Smaulgld. You can go to Subscribestar. I don't know what's on Patreon. I don't spend any time there other than looking at my own account. But I'm sure there's people asking. Well, that would make sense. If they're asking for money, there might be. It's funny because a lot of these places, these companies, they have all types of, they ban people that they don't like their political views on, but I suppose maybe they allow hoes. I don't know. The CPC has 100% tariff on Smaulgld mugs and products. Well, that's not good. Nomadic Giant says, I don't use PayPal. I don't use Patreon. I just PayPal a donation for a year. This analysis is worth, yes, thank you very much, Nomadic Giant. He did indeed send a very generous one-off payment on PayPal. Some people have been very generous with their Bitcoin and Litecoin on one-off payments. No, I've been very pleased. The only thing I say is that I don't have a lot and I don't make enough to pay the hosting on the Smaulgld site, but I am very pleased and very appreciative of the people who send me notes, send me checks, send me things in the mail. And we did sell well over 100 mugs, which was pretty fascinating. The mug sales have pretty much dried up. I don't pump them as much, but for a while I was selling a dozen or so a week, running to the mailbox and shipping them out. That was a lot of fun. So if you're interested in a Smaulgld mug, that is another way of helping the site out as well. If you want to pay with Bitcoin or Litecoin, let me know. All right. Fiona Whalen, silver pumpers calmed down quite a bit in the last few years, I would say, since Trump victory. Yeah, but some of them are still pumping the China to crush the dollar. I guess they never got off that. I mean, Peter Schiff, he doesn't care that Trump won. He's still pumping China and bashing the U.S., it seems. All right, let's see what else we have. Yeah, you're right. Jim Willie is now out, you know. Carl Joseph DeMarco sent me this. I don't know what to make of it. He says an appeal. I don't think I'm breaking any confidences here. He sent out from Golden Jackass, note to full client base and complimentaries. I guess this is a public message. About 10 days ago, he's added a donation button. But he's asking for a donation button, not on the basis that, hey, this is good analysis, which we'll leave that for you to decide. But he's had serious financial losses. He's got issues with fraud cases, crime, earthquakes, extortion. I mean, basically, it sounds like he's in financial difficulty, which I'm sympathetic to. I mean, I don't think that's a good thing. But, you know, if you're asking for money because you're having a hard time, I mean, a lot of people are having a hard time. But he says the losses are very significant, modestly described as well over 6 figures. There's no respect in this country for legal documents. Anyway, it sounds like he's had problems. Why am I bringing this up? Why did I bring this up? Because, they were talking. Fiona was talking about all the people that used to hear from, pumping gold and silver, and well, there you go. Having financial difficulty. Oh, the point is also that I don't think I would. You never know if I was having financial difficulties if I'd ask for money, because I think that's. I have no trouble asking for money on the basis that, hey, this takes a lot of time to do. If you want it to stick around, if you see value in what I'm doing, then donate what you think. But it's like when you ask for a raise, and I had someone ask for a raise once, and they said they wanted a raise, and I said, okay, well, why do you deserve it? And they said, I need the money. Okay, but that's not a justification for a raise. You don't ask for money because you need it. You ask for money because you think you're providing value, and you think that someone should pay you for that value. Well, at least how I look at it now. But I suppose if I was having financial difficulties, then I guess I would say I'm having financial difficulties and ask for money on that basis. But again, I'd be more inclined to send somebody money in an exchange. I mean, one is charity and one is an exchange. So I suppose charity's fine too. If you want to send Jim Willie money and you feel bad for him, then that's a good thing too, I suppose. But it's different than asking for money for service provided, obviously. What else do we have here? On the side of my YouTube channel, suggested channels is DW, and a lot of pumpers there. You know, I don't get into suggested channels. I don't know what YouTube has against me, but I don't get. I've seen in other people's thing that I don't get suggested. That's why I don't have that many views. The only people I get are the people that already know about Smaulgld. All right, let's see. You guys are talking about what you want to buy. All right. Good evening, Sunday evening Smaulgld and fans, says Taylor Collins. He says his Smaulgld mug is tippy top. What's in that mug tonight, Taylor? Let's see. All right, I think that's not about it. No, I think that's about it. The Why Smaulgld video is right. Is Coins AZ is working for that. You know, I should make it because there's at least 5 major stories that the pumpers and the alternative media pumped, and I debunked, and I was absolutely right. Starting with the Fed can never raise interest rates. I did many videos, many blog posts explaining why the Fed would raise rates, how they would raise rates, how often they would raise rates. I was right about the gold-backed yuan. I was right about there not being a COMEX default. So many of them that these pumpers get away with. And get away with in still being experts. These predictions, what's going to happen, collapse this year, collapse that year, never happened. So I will make that video, but it'll be a bit of work. All right, let's see here. Anything else? All right. I think that's it. So, guys, I think we'll see you tomorrow. Yeah, maybe we'll see you tomorrow. Maybe we won't, but hope to see you tomorrow. Well, thank you very much for joining me tonight, and we will see you when we see you. Good night.